Wow, what a difference a single year can make, because almost exactly 1 year ago, CMHC was ringing the alarm bells with their absolute bombshell prediction that home prices in Canada would decline between 9 and 18%. And then CMHC CEO Evan Siddall was extremely antagonistic with anybody that dared disagree with that prediction, even when it was pretty obvious that wasn't going to be true. Well, now, just today, just released, CMHC is doing a complete 180 and now predicting price increases in Canada for the next 3 years. Let's get into this report on this episode of Bald Prairie Real Estate. Hey everyone, welcome back to another episode of Bald Prairie Real Estate, where I want to educate you about Canadian real estate. If you're new here, my name is Matthew Fife, from Real Estate Agent from Regina, Saskatoon, and this is hot off the press. CMHC just pushed this out, and it's almost exactly 1 year to the day, so it's pretty crazy to see what a difference 1 year can make, because it was this time last year, and I was actually getting ready to do a follow-up video on this in a couple of weeks. CMHC had predicted massive declines in Canadian house prices across the board, and the prices wouldn't start recovering until late 2021. We all know that is nowhere close to being true, and they're out with a brand new forecast. I told you, if they came out with a new forecast, I would cover it, and so here we go. We're going to take a look at the national outlook and some of the highlights, and then we are going to get into all the different cities that I cover in my Bald Prairie Real Estate market update, which is coming. I was actually working on it when this report went live. I dropped everything and started on this video so I could get this out to you covering this. That market update is coming very quickly, but a year ago, 18% declines potentially. Now we're talking 5 to 10% increases yearly until 2023. That is quite a change from CMHC from 1 year ago. Before we get into it, let's do what we always do and start with another terrible joke. This one is from another user, Dan, who sent in a few before. I had to use this one. It was hilarious. Why did the chicken cross the park? To get to the other slide. If you have a terrible joke I can use in a future episode of Bald Prairie Real Estate, put it in the comments below. Okay, let's take a quick look at the national highlights here, an overview before we get into the individual cities. And if you have been following me for a while, some of these are gonna sound really familiar. If you're not following me already, hit that subscribe button so you can be the most up-to-date on the Canadian real estate market possible. Now I'm gonna read these line for line. I got my notes right in front of me here. That's why I'll be looking down, but I wanna read the exact lines here. The level of existing home sales and price growth are forecast to moderate from the unsustainable levels of 2020, but remain elevated. The pace of sales is expected to moderate from recent highs. Slower sales growth will help moderate price growth. Rental demand will recover as immigration recovers, but vacancy rates will likely remain elevated. And housing starts will stabilize at levels consistent with household formation by the end of 2023. The immigration one is one I have been talking about for a while. That is going to be a driver for the Canadian real estate market in the back half of 2021, and I think through for the next couple of years here. And then a couple of things on the economy they see here. Late 2020 economic trends are largely expected to continue in 2021. Employment conditions will continue to recover, but employment rates will be below pre-COVID-19 levels. Similarly, while GDP growth will rebound strongly in 2021 from the decline in 2020, the overall level of GDP will not fully recover to pre-COVID levels by the end of this year, meaning 2021. However, the optimistic end of our forecast range does account for the possibility of a stronger recovery in GDP in 2021 than the offsets from the 2020 decline and pushes down in the employment. They're also expecting sales to continue to increase. A little bit of background. In 2018, there was about 460,000 homes sold in Canada. In 2019, the number was 490,000. In 2020, we hit 551,000, most homes ever sold in a year. They're projecting 620 to 650,000 in 2021, and then slowly starting to level off, and that 520 to 550,000 homes per year sold for the next 2 years after that. So that's what the highlights are. Let's quickly now jump into the individual cities and take a look at those. So what does CMHC have to say about the Victoria real estate market? Well, a couple of things stuck out to me. They're talking about the pace of both sales and prices, those increases happening now, to taper off over the next couple of years as competition and demand from buyers starts to subside a little bit. They're expecting the economic recovery to pre-pandemic levels to happen in 2022. They're also expecting a big increase in housing starts in 2021, and they're expecting prices to increase 5 to 7% through 2023 in Victoria. In Vancouver, CMHC is seeing the return of the rental market from tourism international students. This is something I've talked about for quite a while, and CMHC is agreeing with that. They're expecting to see more of that in the future here. They're also thinking that with higher prices right now, that will actually encourage more development, and development will be financially sustainable because of those higher prices that may not have been without these higher prices. They are expecting the number of units sold to start to slow down a little bit through 2022 and 2023. And their projection could see house prices in Vancouver peak in 2022 on the low end, or on the high end, it could continue to rise. In other words, 3 years out, nobody really knows. In Calgary, CMHC is expecting the labor market to recover in 2021 and start increasing through 2022. New construction is expected to increase as economic conditions improve. Unit sales will rise through 2021 before flattening in 2022 and 23. And they're expecting prices to continue to rise through 2021 and 2022, although a little bit of a flattening in the back half of 2022 and maybe a possible decrease in 2023. In Edmonton, CMHC is continuing to see improving economic conditions. They're also expecting the rental market to see some strength. Sales will continue to increase through 2021, starting to taper off in 2022 and 2023. And they also expect prices to follow that similar trend, increasing through 2021, and the pace of that increase will taper off in 2022 and 2023. In Regina, CMHC sees the resale market being as strong in 2021 as it was in 2020. They're expecting a boom in new construction as limited resale inventory continues to push home prices up in the city. They're expecting housing demand to remain strong as economic and demographic fundamentals support to improve that growth. They're expecting unit sales similar in 2021 as 2020, and prices continue to increase through 2023. In Saskatoon, it's basically a carbon copy of what we saw in Regina. The economic fundamentals will continue to support price increases, and unit sales will be as strong this year as they were last year. They're also expecting new construction starts to continue to increase, and prices will probably continue to increase through 2023. In Winnipeg, they're talking about the economic fundamentals continuing to improve from pre-pandemic levels, but they are talking about a weakening in the rental market as inventory and supply has started to increase in Winnipeg as more has come on stream. Sales are expected to remain strong, and prices are expected to continue to increase like we've been seeing in Winnipeg. In the Toronto real estate market, here's what CMHC had to say. Economic recovery, immigration, tourism to support continued demand for housing and the rental market. It sounds really familiar to what I've been saying for a while, especially about the rental market being a strength in Toronto in the upcoming years. The resale market will continue to remain strong, but is going to moderate from recent highs. Unit sales likely to slow down in 2022 and 2023, but well above normal levels. Price growth continuing, but is going to slow through 2022 and 2023. They are expecting price increases of about 5 to 7% per year in Toronto. In Ottawa, CMHC is talking about the rental market being a weakness in Ottawa. They've had a number of construction starts now completing. Inventory levels are much higher than they historically have been. It's going to be very dependent on, of course, the international student market and immigration eating into some of that inventory levels. But sales are expected to slow through the end of the year, but still remain elevated from normal levels, and prices to increase through 2023. In the Montreal real estate market, CMHC expects that this boom in sales is going to start driving new home construction and elevated levels from what it has been. But the extremely limited inventory and reduced buying power will slow the number of homes sold. We've talked about inventory levels being extremely low in Montreal for a while, and that's holding back sales right now, and it's driving up prices. They expect market conditions to continue to support sellers through 2021 and prices to continue appreciating kind of at these levels, but still starting to taper in 2022 and 2023. In Halifax, CMHC anticipates the rental market to remain very tight because of limited supply. New construction is going to increase, and unit sales are expected to decline over the next 3 years. They're also anticipating prices to start to flatten and potentially decline over the next 3 years. They are anticipating weaker demand in Halifax. That will have a cooling effect. With the limited inventory in Halifax, this is going to take a while to take effect though. So what do you guys think of CMHC's complete 180 from just 1 year ago, where it was doom and gloom and prices were going to collapse, and now it's actually really optimistic, I'd say, where prices continue to increase, although we are going to see that moderation in terms of prices not going to continue to increase at the levels that they are right now. I think everybody agrees that is unsustainable. You just can't continue to see 20% price increases year over year, but the projections are more like 5 to 10% continuing for the next couple of years, with sales being at higher levels. And then of course the return of immigration, tourism, international students, all that to help drive the rental market, and that immigration will turn into buyers in about 3 to 5 years from now. But what do you guys think? Let me know in the comments below. If you want to learn more, I've got a first-time homebuyer playlist right here that you can check out. And if you want my most recent market update right here, you can check that one out as well. As always, guys, thanks very much for watching.